Hey, good morning. How is everybody doing today? Hope you're doing well. It's Tuesday, the 29th of September. Here for just a quick look at the markets. We're going to very quickly have a look at Forex. There's not a lot going on. And then we'll pop over and see what the key levels are in the futures market and talk about some things that we can do there potentially. And then I'll talk about a trade from yesterday that you might have been watching depending on how you're set up in TradingView. So anyway, let's just start right here with the news, because this is an important piece. I talk about it every morning. We need to know what news is coming up, what high impact news to have on our calendars so that we can avoid any potential pitfalls that might come up from the day or during our trading day. That we might see some activity in the chart and be like, oh my gosh, there's something going on and want to get into a trade, but it's really just news coming up, right? So we should be aware of what's happening through the day. And so the news calendar, I use Forex Factory, but you can use anything out there. FXstreet has one, Bloomberg has one, Financial Juice has one over here. So there's news calendars all over the place that you can pull up and take part in, just to know what's going on for the day so far. So anyway, coming up today, we've got a couple of reports on the books. We've got wholesale inventory reports that are coming up here, goods trade balance, S&P composite. They're all listed as low impact, and while there's reports coming out, they are fairly low impact. Could they be higher? I guess if there's a big delta from what's expected, they could have a higher impact. But really the big news this week, as I mentioned yesterday, we've got non-farm payroll coming up on Friday. On Wednesday is the ADP report, which is the precursor to non-farm payroll. Typically this is red. It's listed as an orange report this week. But ultimately the ADP information could be kind of a precursor to that. And then of course we've got non-farm payroll on Friday, which is a very heavily watched and heavily traded news event. So just be aware of what's coming up. As far as what to be looking at trading for the day, there's not a whole lot going on that we can take advantage of right now. Just looking across the board here to our more active currencies, the euro versus the CAD, is typically pretty active. The pound versus the CAD, pound versus the US dollar are typically some more active currencies that we could participate in. However, looking at this right off the bat, the Euro CAD, it's already moved 75 pips. Its average is about 90. So, the chances of really seeing that opportunity to tap in and maybe get a quick 20 pips might be slimmer than we'd like to take on those odds. The euro, though, is the stronger currency. The other two strong currencies for the morning are the Aussie and the New Zealand, but they're fast asleep right now, so I don't really see those as being viable trading options for us. I'd rather, as I mentioned before, participate in markets that are actually open and active right now. So, looking at cross pairs with, the euro, the pound, they're still active right now. The Swissy I don't talk much about. It's not as heavily traded as the euro and the pound, so I don't really look at the Swissy too much either. So the euro, pound, USD, CAD, those would be the biggies to watch. The yen is pretty heavily traded throughout the day, but if the yen's moving, the US dollar typically is moving with it as well. So there's a better currency option to get into if we have the right opportunities. So anyway, with that said, if the euro continues pushing to strength, maybe we can find some things to pair against it in the form of maybe the dollar or even the yen out there. But the euro yen is kind of the same as what we were seeing with the euro CAD. It's already moved most of its range. The euro dollar, if the euro continues to push to strength, the euro versus the USD might be the tradable option. We've also got, if this divergence continues, the pound versus the CAD could be a biggie. Pound CAD yesterday, it moved 212 pips on an average of about 150. Today it's only moved 80. So, we've moved about a little over half of its typical range. So, if we get a push on the pound, that could be a great opportunity to pair the pound with the CAD and maybe see some continued opportunity there. So that's what we'll be watching for the day here. What's going on with this? There it goes. What we can be watching for the day. You know, if this pound continues to break higher here, that could be the trade is the pound versus the CAD. So moving on over to the futures market, let's have a look at what's going on over here. S&P, we've got a 4-hour bias that's short, 30-minute bias that's long. So we have a mixed bias here on the S&P. That's telling us right now, hey, let's just sit on our hands and not do anything. Let's see if this rolls over, and if we continue back long, that's great. Or if our shorter term, you know, pushes down, breaks down here below 33.20, that would be our opportunity to continue looking at shorts again for this. But for right now, we have a mixed bias. We don't want to do anything. Kind of caught here in no man's land. We've got 32.20 down here below us, which is a key level, you know, 32.20 right here. And if we can break down below 33.20, that certainly could be a potential opportunity to look for short trades on the S&P. Above 33.60, that'll be our opportunity to keep looking long. And really, if it breaks back above here, it might pull our 4-hour up enough. If we get some closed candles that are higher, might pull our 4-hour up enough to change that direction. But for right now, again, just like we were yesterday, we have a mixed bias. So we have a short bias here and a long bias here. That tells us just wait, just be patient and wait. It's a hard lesson to learn, but it's a biggie. The more patient you can be in trading, the better opportunities you're going to find. You're going to be taking trades that actually meet your plan versus just going out there and hoping to get a hit. You know, if we stick to the plan, and I know I say this like a broken record, if we stick to the plan, focus on the process, everything else comes together with it. The fruits of the rewards are in the active you know, labor of following a specific plan. If you're just randomly doing stuff, you're never going to see that nice end result. Okay, crude is crude's in a long bias still. We have our 4-hour bias here that's long. Our 30-minute bias technically is still long as well. However, you know, watch this. If we start to break down and break below 40.20 here, that could pull our moving averages down a bit and could cause these to be in a mixed bias as well. But for right now, crude is still long until we see it break down further. So, you know, right now 40.20 is kind of our support level for us. So we keep bouncing off here. 40.40, a little higher level. You know, we could be looking at breaks above 40.40, even above 40.60 to go long, which would be in the direction of that current trend. But if it breaks down below 40.20, I'd say, you know, just sit on it and wait to see if we get a move back in the right direction that confirms that directional bias. If it doesn't, again, you don't have to do anything. Wait for the things to move in that confirmed bias. Over on gold, we have a mixed bias. Our 4-hour is short, 30 minutes long, so we're not doing anything on gold. We're just kind of hanging back and letting the market do what the market does until it gets us into a spot where we can take advantage of that. Popping over here, real quickly before I wrap it up, just to talk yesterday about what happened yesterday. We mentioned in the morning no directional bias on the S&P, so there are no trades there. The NASDAQ did have a directional bias that had already flipped. The 4-hour was long and the 30-minute was long. And so what we saw yesterday is we saw a pullback occurring here. During regular trading hours, we saw a market making lower highs, lower lows, and then we can see it broke out from there, went back in the direction of that current trend. Risk on this was about $80, maybe $85, and ultimately we're stopped out as, you know, just trailing the stop up. You know, we would have been stopped out here for a little bit of win of about $65 and an $85 risk, but then it continued on without us and did ultimately go up to our proposed reward point, which would have been, you know, at least 2x of what our initial risk was, maybe 3x of our initial risk. So anyway, that's potential trading opportunity there. But big things, big takeaways from this is just stick to the plan, have a plan. What's going on with that piece of hair over there? Anyway, have a plan, stick to your plan, know what you're gonna do before you come in and sit down to actually trade. Take some time ahead of the market, look at what's going on, determine what your directional bias is, determine what points you're willing to trade, and if it doesn't get there, you don't trade, right? You just figure out what your plan is for the day and then execute that plan. Have stop points, have profit points, know how you're gonna manage your stop loss. It just takes a second to think it through. Create that plan and then follow that plan. And we give you some really good trading ideas here. We talk about a trading method that you can apply very, very easily using directional bias and then just watching for pullbacks, which is, if you're in a long trend, waiting for candles to make lower highs and lower lows and then break out of those lower highs and lower lows back in the direction of the trend. Reverse that for the short. Super, super, super easy trading plan. It's not any spectacular 90% win rate or anything of that nature, but you are winning more than you lose because you're setting targets at 2 or 3x of what your initial risk is. And it's just a very nice, easy, methodical way to go at it. Once you get that down, you can start looking at other things like reversal points and counter trend trades and whatnot. But I don't even talk about those because most people have this shiny object syndrome and we'll just jump to whichever one made money yesterday, which doesn't mean you're going to make money today, right? If you just stick to following a plan first and follow one of those really, really easy strategies that I talk about all the damn time, get that down, and then we can look at other stuff to go from there. All right, so I'm going to leave it here, leave it with that. We talked about what's happening in Forex. I'm digging what's going on with the pound versus the CAD. I think there's some opportunity there simply on the fact that, reversion to mean, we've moved 85 pips, 84 pips for the day. Average is typically into the mid 100s, so like 140, 150 pip range. So, I think there's opportunity there on the pound CAD. It's certainly the only one that's only moved a small fraction of its typical movement. We talked about what's going on in the futures market. We've got mixed bias in the S&P, mixed bias in gold, long bias in crude, but watch for those points that I mentioned. If things break down below certain areas, all bets may be off, at least until we get through things. There's a big debate tonight. I'm surprised that wasn't on the news calendar, but there's a debate tonight which could certainly be market impactful depending on what things come out of that and how the market kind of sees things potentially going following that debate. That could be a market mover as well. So just be aware of all the factors that are out there. Big thing, again, have a plan before you step into the market and just trade that plan. All right, so that's it. I'm gonna leave you here. If we have any trades on the S&P, on S&P, gold, or crude, we'll talk about what those are. But for now, we'll let you go and get back to your trading day and executing your trading plan. All right, have a good one. Bye.